Good morning, dear students. Welcome to KLE's online classes. Let us continuation our discussion on industrial finance. In previous class, we completed internal and external sources of industrial sector, and today we are moving to institutions providing industrial finance. Institutions providing industries finance. And so see that to provide adequate and timely finance to the industrial sector, India had developed institutional infrastructure by establishing a number of specialized financial institutions in the post-independence period of India. These are providing long-term finance to development of industrial sector, such as IFCI, Industrial Financial Corporation of India, State Financial Corporation of India, Industrial Credit and Investment Corporation of India, Industrial Development Bank of India, and Small Industrial Development Bank of India, and Exim Bank of India. See, the number of institutional established by Government of India after post-independence day. See, in the year of 1947, we got the freedom from British government, and after onwards, India has constructed own government with the Constitution of India, and so the measurement taken by Government of India to development of industrial sector to providing financial assistance by the institutional banks like such as providing such type of institutional financial institutions are providing long-term loan to industries development. And see, we are going to the discussion. First one is IFCI, Industrial Financial Corporation of India. See, IFCI was established in 1948 under the Special Act of the Parliament. See, the Government of India, so in Parliament, this act was passed by Indian Parliament, so in the year of 1948. See, the major objective of IFCI is to provide long-term financial assistance to the industrial units. See, the prime aim of Industrial Financial Corporation of India is providing long-term loan facilities to development of industrial units, and it has authorized capital to 20 crores. So this bank has covered and authorized 20 crores, and its shares are subscribed by Industrial Development Bank of India like IDBI and commercial banks, insurance companies, investment trusts, and cooperative banks. Yes, the IFCI is subscribing by IDBI, commercial banks, insurance companies, investment trusts, and cooperative banks. The initial seed amount authorized by IFCI 20 crore rupees, and prime aim of IFCI is providing long-term financial assistance to industrial units, and IDBI alone holds 50% of share in IFCI. See, the Industrial Development Bank of India is hold 50% of shares in IFCI and authorized. So this also IFCI is supreme empowerment is authorized to issue and sales bonds, debentures with view to raise working capital. So see, the working capital increasing purposes, the IFCI is authorized to issue sales bonds and debentures with view to increasing working capital, and also empowered from public deposits, state and central government. Yes, even public also deposit in IFCI, state government is also deposit in IFCI, and central government is also deposit in IFCI. So the bank is got young power and from public deposits, state deposits and central government deposits, and it allowed to borrow foreign exchange reserves from World Bank and other institutions. Like the IFCI is allowed to borrow from international institutions like IDBI or World Bank, UNESCO, IDA, like international financial institutions also eligible to provide a loan to IFCI. IFCI is got eligibility to take loan from foreign countries, also foreign international institutions also. Then it is borrow from the RBI also. See, the Industrial Financial Corporation of India is borrowing money from Reserve Bank of India, is also one of the supreme power of IFCI to development of industrial units in India, and originally started autonomous but now working as a subsidiary of the IDBI. See, the initial this bank was started autonomous power but now working as a subsidiary of the Industrial Development Bank of India. So these are the brief profile of Industrial Financial Corporation of India. And what are the main functions done by IFCI in India? See, to guarantee rupee loans floated in the open market by industrial units. See, this bank is guaranteeing rupee loans floated in the open market by industrial units. Okay, the floated loans is guaranteed by IFCI from the industrial units. Then the second one is grant loan and advances both in terms of rupee and foreign currencies within 25 years. See, the loan and advances is supplied by IFCI to industrial units in terms of rupee value and abroad currency value. It means foreign currency and Indian currency. So providing loan to industrial units to development of themselves. So within 25 years will be repayable by industrial units to IFCI bank. And third one function is to underwrite the issue of share and debentures. See, this bank is underwriting the issue of shares and debentures from industrial units. And fourth function is to guarantee deferred payments. See, it is also one of the very important aspect in IFCI. It will be guaranteeing deferred payments in future payment by the industrial units to other industries or other countries. Deferred payment is nothing but in future payment. See, the guarantee by IFCI so to facilitate the deferred payments. And then next one is to act as an agent of the government. It also act as an agent of the government with approval for the IBRD. See, Industrial Bank for Rural Development is respect of loans sanctioned by them also. It is act an agent of government, and approval for the IBRD is respect of loans and sanctioned by them. These are prime functions of IFCI in India. And what are the problems faced by Industrial Financial Corporation of India? See, also suffer from inadequate and delays in sanctioning the loans. So when Indian industries is applying loan from IFCI, the lag is applicable. Lag is nothing but the delaying of sanctioning loan to industrial units is one of the biggest mistake made by IFCI. So is also one of the problem. And so procedures of sanctioning loan is very lengthy. It means the procedure of sanctioning loan is very lengthy. It is also one of the problem faced by industrial units in India. See, then the high rate of interest. See, the IFCI is levying so rate of interest on industrial loans is very high compared to other institutions. Loan is also one of the problem, and concentrate wealth and power. So this bank, the IFCI, is concentrating wealth and power only. See, the wealth is nothing but it means maximizing the profit, and concentration power, it means dominating the market will be, see, concentration only two things: wealth and money, wealth and so power. And discriminatory policy. Discriminatory policy is nothing but will be treat equal but not treat equal. See, the IFCI is not treat equal among the industries. So it is also discriminated by IFCI, only supplying and only sanctioning a particular industry or dominant industry in the country is also discriminating. And defaulting borrowers. See, the defaulting borrowers also, whether who are taking loan from IFCI, they are not transparently repaying rate of interest and loan also. These problems are faced by Industrial Financial Corporation of India. Let me stop. Tomorrow we shall continuing with another institution of industrial finance.